Oh yeah,
Welcome and good morning, everybody. Let us know if you can hear us okay. Steve, how you doing this morning?
man, I'm doing pretty good. Monday mornings are always great. Love the coffee.
Love the coffee. Dude, I got to get a new chair. This one is so squeaky. Can you hear it? Every time I
Mm,
move,
every time you move,
every time. I figure. All right, I'll get a new chair by next week.
get you a new
Um,
office chair.
I feel like I just did that. Maybe I'll just get some WD-40. You want me to put this chart up on the screen?
Yep. Let's go ahead and get started. Let's kind of talk about the markets a little bit. It's selling off, so there's a lot going on. Let me blow this up. We'll kind of dive right into this. I was telling Ben that it's funny how kind of have a plan for a show and then the market really rattles things. So let me just get straight into the market. This morning I emailed my subscribers and I was talking about personality changes. Right, we all have, the market has personalities during different uptrends, downtrends, just like our individual stocks. So when you have a nice and neat uptrend, which we've pretty much had, just lots of pullbacks along the way, supported the 50-day moving average. That's a clear-cut personality. Now all of a sudden we have a gap way below the 50-day moving average on the S&P 500, right? Personality has changed. So on Friday, the S&P 500 slightly closed below the 50-day moving average. Oh, my mouse isn't wanting to do it. And then that was an ugly trend line. And then this morning, it's falling further below, and you can kind of see all the volume that happened on Friday. So, what's interesting about this is the S&P 500 has not had back-to-back days that closed below the 50-day moving average since November 2nd and November 3rd of last year. That's kind of hard to wrap your head around. Now the Nasdaq looks completely different, right? It had a major correction along the way, but the S&P 500 really has been nice and neat, had some pullbacks along the way, all the way through for the last 10 and a half months. So if you haven't had multiple days where the S&P 500 closed below the 50-day moving average in 10 plus months, and now all of a sudden, unless we have just a major comeback today, which is possible, we have a personality change in the overall market. So I usually say if you got 2 or 3 days where the overall market closes above and below the line, right? That's usually a shift in trend. So it's just kind of something to keep an eye on. 2 or 3 days, that's just kind of what I look at. If something has held 3 days and I'm like, okay, now we have a complete change in the overall market, or at least the trend, I have to assume the trend has changed, because a lot of times in the first 1 to 2 days, you can really get those whipsaws where it can close, below it, just like it did right here, and then come right back. So just like the NASDAQ did a couple weeks ago. Let's look at the NASDAQ real quick. So if we look at the NASDAQ didn't close below the 50-day moving average on Friday, but it gapped below it this morning. So, excuse me, we'll just kind of have to wait and see, if there is some support that comes in on the NASDAQ today. It could finish closing above the 50-day moving average. But again, you can see right here, the NASDAQ since November 2nd of last year clearly, I have allergies, clearly looks different than the S&P 500. Okay, so we'll just take it day by day. What I always tell people is, just because the market is selling off, make sure you have an individual trade plan with each individual stock. I've made a lot of huge mistakes over the last decade plus of, every time I think the market's going to sell off into something bigger, I sell everything, and usually I have half my portfolio that sells off and then half that hangs in there. Right? You want to try to hang in there with the stocks that are really holding the line, right? And at this point in time, I'll say holding the line. I'll say holding above the 50-day moving average, because if you're constantly getting in and getting out, that's going to be hard for the overall portfolio. So anytime you enter a stock, you should know when you're getting out before you even hit the buy button. But right now, the markets are looking weaker. But again, it could pop. tomorrow or the next day. So I'm just going to take this day by day. I'm really going to be focusing on this pink line, which is the 20-day moving average, because a lot of times it's what I call the rally line. Now, in the strongest rallies, you'll see the market will find support at this line multiple times, then usually get a deeper pullback to the 50. Clearly that happened, right? And then it all breaks. Well, that can happen on the flip side as well. So you can see over here when the price action started to break the pink line, right? It will try to bounce, and then we're going to see if it gets and then it gets rejected in kind of a deeper correction. So that's what I'm going to wait. If we do get a bounce, which even if we get another sell-off, I'm going to watch that bounce and to see if we get rejected at the 20-day moving average. Because a lot of times when you're in a rally, you'll find support at least one, maybe two times before it breaks. Same thing in a correction. You'll get resistance maybe 1-2 times, and then it breaks through. Okay, so that's kind of what I'm looking at right now, and that will take a couple days to play out. So I hope that makes sense. So when I am looking at, when the market starts to sell off, I always ask myself, okay, I really pay attention to my watch list, and I say, what is selling off the least? And then I always ask myself, what is selling off the most? Because if the market sells off 2%, and I have some growth stocks in my watch list that are selling off 8-9%, I'm probably just going to start, and they're breaking the 50-day and all that, I'm probably just going to start deleting them from my watch list, right? Because those are weaker stocks. Now, on the flip side, if you have stocks that are hanging in there, right, that are holding up nicely, right, they continue to, get moved to the top of the list. So as of this morning, not a lot is hanging in there, but as of this morning, the Netflix was trying to hang in there. So I was looking at Netflix, and actually when the market opened, this was tugging and pulling and starting to hang in there. And now it's kind of selling off a little bit with the overall market, which is fine. But that's how quickly everything can change. But I would advise you to kind of put this on your watch list, just because you had a major, kind of a major breakout, right? It broke out to an all-time high. It broke out of this downtrend. I could clearly draw a downtrend, right? It broke out. And now you have the pullback that's coming in with the overall market. If this pulls back into that 550 range, right, that might not be a bad entry, because you really have double support or triple support. You have a downtrend line support. You have a 50-day moving average support. And you kind of have this pivot right here. So even though Netflix isn't the most exciting stock, sometimes we want some of the larger cap names in our portfolio to help balance everything out, because a lot of the stocks on my watch list, I like aggressive growth stocks, but a lot of them are getting hit really, really hard. When the market goes down 1 to 2%, they could easily be down 5 to 6, right? There is no free lunch. Now, that's the same on the upside, right? If the market's up 1%, they could be up 5%, right? So it's important, I think, to sometimes balance everything out and to have a little bit of everything. That way you can handle a pullback or a correction when it happens, because I've been in those types of markets where everything is going smooth sailing, and I have so much aggressive stuff in my portfolio, and then the market just has a couple bad days and just really just haircuts everything 5 to 10%. That can be easily done when you're playing with aggressive growth stocks. So Netflix is really one I think that should be watched, and that way it can potentially pull back. So just kind of keep an eye on that. Another stock that I was really watching and that I added to my watch list this week was Oasis Petroleum. And the reason why I added that to my watch list is because I noticed a lot of the oil ETFs. I sent out that video over the weekend. A lot of the oil ETFs were doing exactly what this stock is doing, right? They've been consolidating for 3-4 months, and now all of a sudden they're breaking out of a downtrend. They're breaking above, these kind of key pivot levels, and they're acting like they want to rally, right? They want to kind of catch up with the overall market. So at the end of the day, energy stocks, even though oil and gold and silver, it can all buck the trend of the overall market. Commodities can move in different directions than the overall market, but they are stocks. So if you're buying oil stocks, even if oil is hanging in there when the market's selling off, they're likely to sell off too. So what I'd really like to see, this is a really good looking chart before really today. You can see that it had a nice uptrend, right? It consolidated, which is very reasonable given that it pretty much tripled in value, right? It made a nice consolidation. And then look at all this accumulation that really started stepping in right there, right as it's trying to break out of these downtrends. Like a lot of buyers are pushing this up. So let me clear this for a second. So now we have this sell-off, and you can see that the bar is trying to reverse positively in a positive direction. So this could easily create a handle right here. So what I would be looking at is not to buy this on a pullback, but I would buy this as it breaks out, right? And I'm assuming that if the market settles down, that oil, it had a really strong week last week, last week and a half or so, that I think the rally was just probably smacked in the face by the sell-off the last couple of days, but it could be your stronger industry if the market calms down. So I'm looking for these stronger stocks and the strongest industries, right, that are starting to show signs that a trend could be we could be in the early onset of a new trend. Whereas you have a lot of stocks that are extended, right, and need deeper pullbacks. These have already been pulling back and could now just, take off. And again, right, this is a stock. So if the market's going to continue to sell off, this will easily sell off. That's why I'm saying if the market's getting weaker, let's wait for a little bit of strength to come in. I don't want to try to catch a falling knife here. That is not my style. But, with Netflix, I'm saying, hey, maybe look for it to pull back to the 550 level. For this, I'm saying, hey, maybe give it a few days and see if it creates a nice handle, right? A cup with handle pattern, and then it absolutely breaks out. I would probably personally jump on that breakout because the accumulation on this side is looking good, given the health of the overall market. Another stock I kind of want to put on your watch list. So I'm really not recommending buying anything today just based on the way the market is selling off. But another one that is looking really interesting, a couple weeks ago, I put out a IPO video or a live stream IPO. And I said, hey, I'm going to show you a good way to trade these IPOs because a lot of them act the same. So I just came across this European Wax Center stock. As silly as that sounds, I'm not here to discriminate. I don't really care what it is, but the chart is looking pretty interesting to me. So look at this. This is the kind of company exactly like it sounds. They do waxing in Europe. Maybe it's more popular. I don't really care what what all that background story is because I'm just looking at the chart right now. So I talked about, waiting for this shakeout pattern because a lot of times what happens when you have these IPOs that break out, the pink line. I remember if you watch that video, I said, hey, right, let the 20-day moving average. A lot of times what happens, it breaks out, everybody buys, and then it pulls back and it pulls back sharply. Well, one reason it's going to pull back is because this is the obvious place a lot of retail traders are buying. They're going to get shaken out, right? Or at least a lot of times they are. But a lot of times when they get shaken out, it'll come back and give the 20-day exponential moving average a nice little kiss. And if you can buy within 3% of that touch, a lot of times they do find support in a reasonable market. Now, if the market continues its slide, right, all bets are off. That's why I say take it day by day. But these patterns, they really emerge during pullbacks, right? Because the market breaks out and then these IPOs are really, really volatile. So then they're going to pull back aggressively. And what's hard to catch these patterns is because IPOs are so volatile, they pull back really quick, really hard. You either miss it or you're too scared to pull the trigger, all right? Because this can wobble easily, 15, 20% in a few days. But if this pulls back and finds support at the 20-day moving average and you can get it really close, it might not be a bad entry because you have a breakout zone right here. You have, the $25 level, the 20-day moving average, which is trying to play catch up. So if this pulls back, it could find support at the breakout zone, also the 20-day moving average. And what makes me like this pattern even more is because it popped on earnings, right? This move right here, this breakout is completely on earnings. So I'm looking to see if it breaks out on above average volume and ideally pulls back in below average volume, but in volatile markets, that's not always going to happen, right? So you just kind of have to step up and swing the bat. But to me, this chart right here is looking good for a potential shakeout pattern as it gets close to 25. So I would look at it as it gets close to the 20-day moving average and see if that stock finds support. So kind of recap, I'm looking for EWCZ, the European Wax Center, this new IPO, to pull back to the 25 level. I'm looking for Netflix. Full disclosure, I actually do own this one. I'm looking for it to pull back to the 550 level right there. See if it, you have a nice little breakout, kind of see if it finds support in that zone. It does report in a month, so kind of keep an eye on that. But you have a lot of accumulation on the push up. And I'm going to see if we can get some follow through in the energy market. And it was trying to break out last week. It was looking really strong, and then the market's just hitting it. So I'm going to see if we can get a cup with handle breakout on this one. Okay, so it's just 3 fresh ideas. Not a buy sell recommendation, but do your own homework as always. Make your own trading decisions. But I think these are a few setups that could potentially be early in trends, and they're worth at least adding to your watch list. So that's really all I have today. I really just wanted to go over the health of the overall market, and I wanted to go over a few ideas to potentially add to your watch list. Do we have any questions? This Monday morning is really designed just to kind of give a look at the overall market and try to prepare you for a potential game plan right now. But right now, at least for probably a couple days, I think I'm sitting on my hands and seeing how this plays out. So,
no questions? Too early for everybody?
Too early for anybody. So if we don't have any questions, Ben, what's the lineup looking like for the rest of the week?
If we're going to do, are we going with 6 o'clock on Wednesday night?
Yep.
Okay, so we've got the weekly income webinar on 6 o'clock Wednesday night. Mm-hmm. And then we've got
Central time.
Central, correct. And I think we're going to do the options trading with Greg, the credit spreads at 9 a.m. Thursday, if you confirm that. We just switched that on last night. So I need to change that. Credit spreads, options, 9 a.m. Thursday.
That sounds good.
Yeah. Okay. Well, if nobody's got anything and you're good, thanks for getting on early with us Monday morning and giving us something to think about. Oh, wait. Maybe there's a delay.
Sometimes there is a delay. I noticed that Zoom is really quick, but the other webinar service that we use is there's like a minute delay. So PLTR, how is that holding up? That is a stock I really like, but it is a growth stock. This is actually holding up nicely. And the stock has been slightly discourteous to me lately, but I had it. This is the frustrating thing, but it's all part of trading. I had it. It hit an 8% target. I raised my stop to break even, and I got picked off on this red day last week, just barely by a couple pennies. But, I got shaken out. But this is honestly, the stock is looking really good. If you still have it, I would hang on to it. Try to pick a spot on the chart that it shouldn't go below. Because you can see right here that it really, even on Friday when the market was getting hit pretty hard, it finished, it was trying to go higher. So this stock I might try to find a way to get back in, but it's looking pretty good. I might see it's right at the breakout zone. Me personally, I'm going to try to get back in, but I might let the market play out for a few days. So, but this stock is looking really good. It's hard to argue. I mean, look at all this accumulation. You have all this accumulation and the stock's gone nowhere. And that's the kind of stuff that I really like to see, because it means that eventually when you have all these institutions scooping up shares, right? They're exchanging with retail traders like you and I. Eventually there's not going to be any shares available when it's in a sideways action, and then that can only do one thing and push up the price of the stock. So lots of accumulation. It looks like it's going to be a nice stock in a reasonable environment. So ABCL.
PLTR.
PLTR. Angry at it. No, I can't get angry at it because then I won't want to buy it back. I'm going to try to buy it back, right? Don't get emotional. Sometimes it just happens. This is a great case study. If you look at PLTR, like, you had a plan. You know, sometimes you just get picked off. Sometimes you get shaken out. It's part of it. But there is no rules that says you cannot buy it back. Okay? There is no rule. So don't get angry at a stock. Don't throw it out. It's still at the top of my watch list. Some of my best trades last year were stocks that I got picked off a couple times, and I even bought a stock a third time, and then it went to the moon. ABCL, this is actually looking pretty good. This is a biotech. Let me look at the fundamentals real quick. Boy, that's kind of some crazy. Get 200, 227. I don't know the fundamental story there. Kind of a small biotech, but it's hard to argue. It's looking pretty good, because if you remember at the beginning of the show, I said, hey, when a stock starts to move above the 50-day moving average and then holds it, right? Usually that's showing me that a trend is changing. And then plus you have this stock tried to get going last week. It tried to get going. And at the end of the day, this is the perfect example of why you don't want to buy just any day that ends in Y. The overall market matters. So it tried to break out. It didn't, but this to me looks pretty good. You know, you had a failed breakout IPO base, a lot of failures along the way, and now it has changed personalities. It has spent a couple weeks above the 50-day moving average. So I wonder how much. This one's kind of tough, because, I mean, I'd like to buy it closer to the 50-day moving average, but it's 16% above that level. I'm not going to give my stock that much room, but it looks like it's one worth putting on your watch list. It's actually a good looking idea, because look right here. You had an earnings pop, right? You had an earnings pop, big volume right there. And then it slowly grinded higher, a little distribution, but nothing compared to the accumulation. And then it really tried to break out on Friday, but the market was just too much for it. I might actually add this to my short list. Any other questions?
Forward long term?
Yeah, so long term this is more personal preference, right? I have some long-term ideas, but it's really, when you have a long-term idea, the fundamentals matter a lot more than the technicals, right? Because you're not swing trading it. So forward long-term, I mean, if I were looking at long-term, I mean, it looks like a good looking chart, right? You have accelerating sales, right? Went from negative to positive, triple digit earnings. You have a reasonable valuation. Do I personally think the electrical vehicle market, you know, some of the newer inventory on the market is going to do better? Probably, because they don't have all of the baggage that Ford has with the unions and everything else. And that's not a position on unions. I'm just saying they have different expenses than some of these up and comers do. So that's more up to you. On the chart wise, it looks good, but I would, since it's selling off, I'd kind of wait for a breakout.
Mm-hmm.
All right, wait for that breakout. Let it break back above Friday's high.
Hey, let me respond real quick. Kevin, thanks for joining us first time. So I don't know if you were on when Steve was recommending. We were watching Netflix, Oasis Petroleum, and what was your wax company, Steve? EW.
It's not my wax company. I don't
Yeah.
do bikini waxing. EWCZ.
EWCZ.
I actually had to look at the website this morning. I was like, yeah, there's like bikini wax, all this other stuff. I'm like, hey, the chart looks great, so I don't really care.
Right. So those are the three that we're looking at. So these weren't direct buy recommendations. Market's a little choppy right now, so these were more things we're looking at. As far as, do Steve and I make recommendations? We do have alert services. If you want to, you can check it out, thetradersplan.com, or you can email me at support@thetradersplan.com and tell me more what you're looking for. This is just kind of our pop-up Monday morning show. I'm trying to get the live thing going. And
yeah, we're really just trying to get you going for the week, right? We're trying to kind of give you a few things to think about. If I go over here and look at what is strong today, right, it's just bonds and gold. But a lot of times in utilities, there are no, in my opinion, aggressive sectors or industries that are positive. So a lot of times when the market's selling off, I say, okay, I know utilities and REITs and all this is going to hold up just fine. But are there any aggressive industries that are holding up, right? And so far, we just don't have any today. But sometimes that's just a great way to look. If something is holding up and the market is selling off, you see an ETF, go Google that fact sheet and look at their top 10 stocks, and that's a great way to find some stuff.
Got like 2 more minutes. If anybody has any other tickers he wants to analyze or Steve to analyze, that's what we should do, man. Just a 30-minute, send us their tickers, and we just break them down.
Yeah.
Just ticker analysis. Anybody got something they're looking at that they want to share?
Yeah, I'll probably just let that play out.
What's that?
Oh, I was just thinking the overall market. Someone asked about QQQ. When I looked this morning, it was breaking down. All right, that's a breakdown to me. That's not. That's a sell signal right there. So you have a lot of distribution that came in. You have Facebook that is breaking the 50-day moving average. You have Apple that already did last week. It's just showing signs of a correction.
Mm-hmm.
So I wouldn't feel the need to. I'm not always trying to catch the exact bottom, right? Maybe let's just see if this plays out a little bit, because likely what's going to happen with a lot of these FANG stocks is they're going to bounce and they're going to hit that 20-day moving average. And they're going to take another leg somewhere down there. It's probably where you want to look at. ATER.
Steve, do you remember the movie Hackers from when we were growing up?
Yeah, I do.
Do you remember the name of the main character on Hackers? Zero Cool.
What was his name?
Zero Cool, which
Zero
is
Cool.
The
Oh, okay. Oh man, that movie is way old. ATER.
Classic.
So looking at ATER, yeah, this looks good. It is really, really aggressive. It's up 11% today. Household appliance operates technology powered products across e-commerce. It's kind of interesting.
This was our number one play in the competition last week. We had 5 people play this ticker in the competition last week. 5 people.
It's interesting, but it's also scary. You have a stock that went from $48 to $3, and now, to me, it looks like short covering. Just everyone that's just trying to book profits who shorted the stock. I don't know what's going on, but anything that drops from 49 to $3, probably not my cup of tea.
What is Adder?
So even though technically speaking it looks good, it broke out, pulled back, but I don't know. That's probably it. It was down 40% one day last week. I need something that I can put a stop loss of 10% in max without thinking it's just going to get picked off like that. So I don't know how. I don't know how you sit through a 40% loss in a day.
This one almost ran away with the competition last week and then pulled back. If it had ended on like Wednesday, it was a winner.
Yeah, and then it
just went whoop.
Yeah, and then it got hit 40% in a single day. That's just crazy to me. So
lots of attention around that lately.
I don't know. I don't know what's going on. I haven't read it, but it's not something I would put my money in.
I'm just looking at it.
STC.
Looks like I have to read it.
Smile Direct Club. Yeah, that looks interesting. I wonder why it's popping, because you had a gap down on earnings and then something that's popping massive volume today. I might investigate that a little bit and find out why, but it's a pretty good looking chart, breaking out of a downtrend, lots of accumulation. I'd probably have to read up on it. Maybe it's a turnaround right here. You have negative sales, +1, +63. There's a lot of reasons why you can lose money on earnings, right? Investing in infrastructure, stuff like that. But you don't have any excuses for a decrease in sales unless, we have a recession or something like that. So this to me is looking interesting. I would probably investigate it further to figure out why it's up so much, especially after it gapped down over here just last month. Like what has changed? Because when I'm investing in a stock that is this volatile, I definitely want to know the story. All right, I think we're at 9:30.
Were you talking about EDSA or were you talking about STC?
Yeah, okay, we got one more. ESDA. It didn't pop up on my screen. It probably means it's an over-the-counter stock.
EDSA? It's a
ESDA. EDSA. Okay. Excuse me. It was a biotech stock. Yeah. Biotechs are just something I don't trade a lot, honestly, because, the chart looks good, right? It went up right here, above average volume, pulled back, below average volume, popped today. But again, biotechs are so fundamentally so hype driven based on trials and stuff like that. I don't like keeping up with all the trials, and you can see that it's a pre-revenue biotech. So I usually don't buy pre-revenue biotechs. I've been on the wrong side of an FDA announcement. So on pre-revenue stuff.
Thanks, Neil. Thanks everybody for showing up. I guess we're good. Mm-hmm. So we will announce other classes obviously this week. Like I said, we're going to do an evening class. Steve's going to do one Wednesday night going over the weekly reversal and the weekly income system. And then we are going to get back into the credit spreads, I believe, on Thursday, but I will update everybody. Also, you may have seen the list of cool prizes that I put below on the new competition that we're going to be launching. Guys, you've got to get involved with that. Everybody so far that has, they're just going to get better and better. So anybody who it's totally for free. It's just for us to get engagement and to have us all looking at different tickers and to kind of, just grow as a group. So please get involved in the competitions when we launch this next one. And thanks, everybody. If you haven't subscribed to this YouTube channel, please do so. That helps us as well. Have a great Monday and a great week. Steve, I'll give you a call soon.
Yep. All right. See you guys.
Thanks, everybody.